Welcome back, folks. This is chapter 4 of the crypto bootcamp, and this is going to be about moving averages. So moving average is one of the most important topic that you're going to be learning as an investor and trader. I personally don't use moving average for trading, but I do use them regularly for making investment and daily bias decisions. So let's dive into the topic to understand what moving average is, and let's go.
Welcome back, folks. Today we're going to learn about moving averages. Before we get into the topic, I just wanted to introduce you to a concept called indicators. So this is TradingView, and before you get familiarized with the price action and how to trade and how to use the concepts, you need to understand how to add an indicator to your chart. So click on this indicator, search up the indicator that you're looking for. In this case, we're looking for exponential moving average. And click on that, and the exponential moving average is added to your chart. Okay, so that's how you add an indicator to your chart. Okay, so now let's dive into the topic and understand what moving average is. So what is a moving average? By definition, it means that it just averages all the price actions and draws into this. Okay, so what is it doing? First of all, that you need to understand. Go to the monthly chart and see that it is in a trend, but it is going up and down, and you're not able to tell whether it's in an uptrend, whether it's bullish or bearish, eh? So what you have to do is to understand where the trend is currently, okay? So if you take a look at this one, you see that it is in an uptrend, even though it is going up and down here. As you can see, this was a 42% drop on Bitcoin. Imagine how the altcoins would have suffered, okay? Even then, the monthly trend was still bullish, okay? So in order for you to be confident while holding positions, this is what people do. Like they use moving averages to determine or to make a decision on their investments, okay? So now let's dive into the topic and study more, okay? So there are like two types of moving average. One is simple moving average, and another one is exponential moving average. Okay, so simple moving average is where the closing prices are added up and they are averaged. Exponential moving average puts more emphasis on the recent prices, not all of the closing prices. Okay, in my experience, exponential moving average is more accurate than simple moving average. Okay, so how can you use moving average? You can use it to understand the trends, like I said. You can determine whether it's bullish or bearish. You can use it as support and resistance. See, every time it touches moving average, it bounces off of it, right? And every time it rejects, it acts as a resistance, right? So moving average acts as a support or resistance, okay? So that is another use of moving average. Another one is trading signals. Um, I'm just showing you an example of it, but when we come to the topic later, we can talk in detail about it. Let's go to the 4-hour chart, for example. See, this is a crossover, okay? So a lower time frame exponential moving average crosses over a higher time frame moving average. When this happens, you consider that bearish, okay? Also, you see there is a lower time frame exponential moving average crossed over higher time frame exponential moving average, right? So this is what you call it. Sorry, this is bullish. Okay, so here it goes up from here. Okay, a lot of people use this as a trading strategy. It's not accurate 100%. I don't use it to trade. I use moving average to determine the direction of the market or to determine the bias on a higher time frame. On a lower time frame, I'll teach you in the next chapter when we learn about how you can trade with moving averages. Okay, so as of now, in this session, we're just going to focus on understanding moving average and how to use them for determining the direction of the market, especially as an investor. So, this is one of the major use for me for with moving averages. So if you see, okay, not that. This is the one. So 200-day moving average is one of the indicators that all investors use, okay? This works every single time. And if you see, whenever the candles crosses 200-day moving average, it pumps. You see that? It went up 180%. And the next time it crossed above 200-day moving average, it went up 600%. Okay? And the next time it went over 200-day moving average, currently we are over 245% from the bottom. Also, when it closes below the moving average, it dropped 60%. Again, it closes, retouches the moving average, it drops 48%. So for higher time frame investors, not traders, this is an effective tool to determine whether or not to hold your position or to sell them. Okay, this is why I keep telling people, even though we are down more than 13, 19% from the top, we are still above the 200-day moving average. The worst possible scenario is the retouch of this moving average. Like, by the time it comes down, it goes down a little bit. So the retouch of this moving average, 200-day moving average, is a good point to buy. Unless it's lost, you don't really have to worry. Okay? So this is one thing. And another one is 55 EMA. So now let's go to 55. Let's hide it. This is 55. And you can use this to determine swing trades. Okay? So as you can see, we are currently below the 55-day moving average. And let's see how legit it is. Okay? You see when it went up above the 55-day moving average, it went up about 75%. So it's legit when it comes to swing trading, eh? So let's go and see the bearishness. Like when the 55 EMAs dropped and retouched, it dropped almost like 55%. Okay, so it is legit when it comes to swing trading. Okay, right now, as you can tell, we are currently rejecting from 55 EMA, and what can possibly happen is it can just chop, chop, and chop and retouch this 55 EMA, and when it retouches, it is gonna dump. So we can't tell how far it is gonna go because coin is chopping like this. It can go up a little bit. It can go up like that, and it can go up to 67K. Okay, so you can't tell where it's gonna be, but when it retouches this 55 EMA, it's gonna be a problem. Okay, because it lost it, and when it retouches, it's definitely gonna be a dump. You're gonna be shorting at least until here. So yeah, that's where we are with 55 EMA. And 8 EMA is something a lot of people use for trading. I personally don't rely on EMAs for trading. That's not my style, but I have seen a lot of successful traders use this as a strategy. I initially used this indicator when I was a beginner to make use of lower time frame for trading. It acts as support or resistance. Like, I would stay in a long position as long as it is staying above, these three. If it's dropped below it, I go for a short position. Even though I don't use it anymore, it's a reliable trading strategy. It works for a lot of people. Okay, so don't sleep on it. It is still a good indicator to determine support and resistance. Especially if you are placing a stop loss, you can place it above or below the Williams alligator. Let me explain how. So here you are taking a short position here, and your stop loss is above the wick, and you're drawing here. Let's just say we're targeting the previous low here. So if you're doing this, and if you're placing your stop loss above the Williams alligator, you're only going to lose 0.31% on a 10x leverage. So that's going to be like 3% loss, which is a big deal. And look at the risk reward ratio, it's like 10.8, right? That's what I'm trying to say. So this indicator is pretty good if you want to place a stop loss when you're trading or scalping. And coming back to the topic, so the crossovers, you have something called golden cross and a death cross, okay? A lot of people talk about this in the finance world, and let me explain what it is. So here you have 55 EMA, and then you have 200-day moving average, and you go to the daily chart, and when the 55-day moving average crosses over the 200-day moving average, something like this, see here it crossed over, right? That is the 55 should go on top of 200-day moving average. When this happens, they call it golden cross. When this happens, it goes up significantly on the higher time frame, okay? And then you have something called death cross. So here, when the 55 crosses, when 55 EMA is on top of 200-day moving average, you call this a death cross. Typically, when it happens, everything dumps pretty hard, 65% drop. Understand? So here, we still have a golden cross. It is going pretty well, and we are up about 160%, and there is no death cross. So as of now, you don't have to worry about long term. Okay, so when death cross happens, typically it retouches these moving averages before it drops hard. Okay, so as of now, we lost 55 EMA, which is still bearish by the way. However, we're hoping that it's going to take support at 200-day moving average. So until it is lost, or until death cross or a golden cross is not a leading indicator. Okay, so what do I mean by that is that it happens after everything is done, which means, see, it started pumping almost like from the bottom, it is close to 60%. So which means the alts pumped pretty hard, right? So the golden cross happened after a long while after Bitcoin bottomed. Even though it is late, it is still a good strategy to enter the market with confirmation than to buy here, because it could be dump again. You'll never know, right? If you're here, you are like in max pain, max fear, you wouldn't know where we are at. It might go a little bit more, like it can go lower. So when you have that kind of mindset, you don't even know whether or not to invest in it, right? So what you do is to wait for a golden cross to form, and then you invest in it. In this case, like, you still have 715% gain. You're missing out on 100%. That is okay. You're still gonna gain 8x, right? So that's what I'm trying to say. Like, in the golden cross or the death cross is not a leading indicator, it's a lagging indicator. But you can still use it as an investor, but you cannot use it as a trader because it is lagging. It's not gonna give you, um, you know, it's not gonna give you enough confirmation to take a trade. It's just gonna, tell you where the supports and resistances are, or it's gonna tell you where to keep the stop losses. Okay, so that's how I would use moving averages while trading. But I do use 200-day moving average and 55-day moving average to make decisions on my positions, spot positions. Okay, so this is how you should be using moving average. To summarize, so these are the moving averages that you should be using for your investments. Number one is 200-day moving average. That is to determine whether or not to hold a position or to sell a position. And then you learn about 55-day moving average. This is to determine the direction of the swing trades. And then you learned about the crossover, where a golden cross is bearish and death is bearish and golden cross is bullish. And then you learned about 8 EMA, and then you learn about simple moving average and exponential moving average. Okay, in the next session, I'm going to teach you how to use moving average for trading along with RSI, relative strength index. Okay, so those are the two topics that we're going to cover in the next session. So your homework is to go home and to back test all of these in exponential moving averages. Go to the chart, slap them on it, and try it on different asset classes, not just crypto. This can be used in any asset that you're trading. It could be Japanese stock, it could be commodities or Indian stock, you name it. You can use it on any asset class, okay? Try it on other asset classes and see how it is working, okay? So I hope you enjoyed this session, and I'll see you in the next session. So in the next session, we're going to learn about relative strength index and how to use relative strength index and moving averages for day trading and swing trading. Thank you so much for listening to this session, and I'll see you soon. Thank you.
And if you want to learn advanced trading techniques and want to trade with me, join the community of over 10,000 members in the Discord. The link is in bio.